All right, good morning, good morning. We got another full house today, but the big one's going to be at 8:30. It's very likely going to set the tone for the rest of the day, and any of these others can boost it and in the same direction, but I don't think would be enough to turn us around from whatever direction the PCE index puts us into today. Right, so that's kind of a good way to look at it. On top of that, they came in really well yesterday afternoon and really tried to save the market off that low. It's impressive. We still got to see how that follows through today as well. So as you can see, a full house, 8:30, 10, 10:15, 11:30, 1:30. You want to add to that if there's any additional auctions today, and there's not. Now, the rig count rarely changes much. Most of the time, it may be 2 or 3 rigs up or 2 or 3 rigs down. It's not going to really make much of a difference. That doesn't mean that you shouldn't be ready to go. Something extreme or drastic could happen where they ground all rigs or, even half the fleet. That certainly would be significant, but those are the things that get us, right? It's those random, out of the blue, rare event kind of things that catch people off guard. Looking at what the anticipated impact is, the 8:30 event has, some pretty dark orange impact highlights. Everything else is more of a mild, lighter yellow. And you could see when something is expected to be a real firebomb, they give it that dark red and it's a full bar. So we don't have any of those today. These are enough. All right, so with crude, we've still got these higher high pivots. We can't say that we're getting these higher low pivots, but we don't have higher highs. We do have a really nice setup for a TRB. It's about as good as you could ask for, really. So, if you're looking for a play, crude back up to 81. Something like USO, right? We go look at the chart later on. You don't want to trade this particular thing. We're just using this as the instrument that we're looking at, right? But you don't want to trade this. USO should have the exact same setup. We'd be looking for a TRB in USO back up to that pivot point, whatever the dollar value will be. And the same on Brent crude. What happened to my chart? Open up. Oh, now I did it. All right, Asia down again. Continuing that really beautiful move to the downside. Busby is active now on that. Now Asia's done for the day. They're already closed. Europe is still open. You can see after that rally back up yesterday, they've pretty much just been giving it away all day today. And there's no wick on the bottom of that daily candle because it's pushing to the downside as we speak. Right. So Not looking too good in Europe, at least for the moment. We're starting to get these expansion candles here, like a megaphone pattern. So higher high and higher low, but a higher close. So that was yesterday. And then currently, as things sit right now, pressing to the downside. Another inside bar. We haven't even been able to get a higher high. Really nice outside bar yesterday on the Dow Jones. Nice recovery bar. But not looking too hot yet this morning. And I would say that it's that news right there that caused everything to just drop out of Europe. On top of everything else, we still have Fed speakers today, including Waller and Collins. Thinkorswim's a little laggy today. Now I know that today's morning econ at 8:30 is supposed to be a pretty big deal. But the volume tells me that they're not sitting out waiting for it. Right? Normally when we have a real big event on the horizon, especially an 8:30 event, the volume will be really light because everybody will be sitting out looking for guidance before moving forward. That's not what we're seeing this morning. I'm not saying it's heavy. It's within line of yesterday, for an example. And it's in line with Wednesday. So, it's just another morning looking at the volume. And yet, from my own perspective, I would consider the 8:30 econ today to be the biggest event of the day, maybe on the week. Two days in a row now. I called the top before it dropped. I called the bottom before it rallied. That's getting a little weird. Normally you can, maybe catch one side or the other, but not both, and not 2 days in a row. See if we can get third time a charm today. So we had a very narrow IB in the overnight hours. Right up until 2 o'clock, it was maintaining that IB really nice, and then it just fell out of bed. IB is initial balance. Starts at 6 at night, ends at 7 at night. And we maintain that like an open range, just kind of draw it across the board. And obviously we fell out of it. If we're focused on, say, an inside day, and then perhaps leaving that inside day, it's a very wide range to deal with. From 40.30 down to 39.70. Now we've seen bigger days than this. It's not a massive day, but if we're trying to get an inside day breakout, still got a long ways to go. So kind of a bit of a big deal. We have a market maker move this morning of an additional 0.66%, which equates to around another $25, right? So the ADR right now is 1.6, which is about $65. Add another 5 and then add another 20. So that gets you to about a $90 move. It's also about 2.2% move, which is a weird number. The S&P is way more likely to move 2.25 or 2.5 than it is to move some, 2.15 or something like that, right? Quarters, round numbers, percentages is way more likely than half a inside a quarter. So if we go 2 and we overshoot, we're much more likely to go to 2 1/4 than it is to stop at 2 1/10. For the downside today, just measuring the ADR, not even adding the market maker move yet, 39.50 is the downside. Now, 39.50 is an absolutely critical level. I mean, that thing should be highlighted on your chart, on every single chart. It should be ingrained in your mind by now when it comes to the S&P. 39.50 is a critically important level. So it matters. If we get beyond that, then we focus on the market maker move. Now, there's 2 ways to do that. Since the market maker move covers up or down, it's really 0.33 up or 0.33 down. What I normally do is just add the entire market maker move on one side. And I've had someone ask me about that recently. Why don't I split it? The main reason is if we actually start to trigger into the market maker move, we're very likely to get all of it, right? If things start getting rowdy, it really gets rowdy. So that gets us down to 39.25. There is a cog line at 39.31, I believe. $39.31 at that way, and another one at 39.11. So with the market maker move pushing us down to like 39.25, we're much more likely to go to 39.31 and reject, or hold, or base, or overshoot 39.25 and go to 39.11. That's just what we do. For the upside move, the full ADR on the upside is 40.79. We can add another 0.6 to that. And that gets us to about 41.06. The weekly pivot point is just beyond at 41.09, and then a cog line at 41.11. If we get that close to the center of gravity, COG, cog line, we're going to go to the cog line. So that would be the upside measure if things start to get a little rowdy. 41.11 cog line, and to the downside, it would be the 39.31. And if we overshoot 39.31, then it would be 39.11. That's a 200-point range, right? 41.11 to 39.11. You feeling it? Now, yesterday we made both sides of that range, right? We broke out the top and we broke out the bottom, and then we came back all the way up to the top and broke out again and managed to come back in again. I can't stress enough to newer traders who see these really big moves and get mad that they're not in it. There's a difference between trend and movement. If you go and look up the distinction between a parabolic move and a trend, one of the key characteristic differences is that a parabolic move doesn't pull back to let you in. It just goes. So if you're a pullback trader looking for, a good, solid, professional entry where price, comes up off of the high just a little bit and lets you in on that little pullback, If it goes parabolic, it's not going to do that for you. So if you're going to try to trade this, one of the things that you can do is go into a smaller time frame. If you see price starting to get wild and you're a price action trader, you need something to read, right? There's the difference between a National Geographic magazine that tells a story in pictures and a novel. So if you're trying to read price, you actually need some words. The candles are the words that we use. Price has to tell you something. If you can't see it here, go smaller, find a time frame that gives you something to read. Just to make that analogy really clear, when you're on a daily chart, there are price patterns, there are setups, there's opportunities to trade. You could trade them, but it's a really big candle and it's not really helpful. And we know that it's really big and it's not really helpful, so we go into a smaller time frame because we can't see everything we want to trade inside that big candle. We need something to read. So to see inside that candle, we go to a smaller time frame, like a 60-minute or 30-minute, a 15-minute. But if you look at that 15-minute candle and it's 15 points wide, and there's really just not a whole lot to read, then it's not helping you. You got to go to a smaller time frame. So you go to a 5 or you go to a 1. But at some point, if things are getting really wild out there, even 1-minute candles are really big candles and there's just nothing there to read. Got to go smaller. Depending on your platform, you might have seconds or you might have ticks. Ticks are a really good way to go. The whole idea is set your chart to something that gives you things to read. If you're a price action trader, you need to read the price. I'm bringing it up because I hear people, when I ask them, what's your chart? They give me 1, maybe 2. Oh, I look at the 5-minute and I look at the 30-minute. Well, what if the 5's not giving you something to read? What do you do? Well, I just trade the 5. I stay on the 5. Okay, how's that working out for you? So something to consider, yeah? $10-day, 30-minute volume profile. It's completely trashed like a wadded up piece of bubble gum. There's no pattern here, a D or a P or a B. We've got nothing. Now we do have this shallow area here. It's the same shallow area we were talking about yesterday. If we were to get a topside breakout, we could move through this shallow area really fast, just like we did right here. When we made that move to the downside, there was nothing to stop it, nothing to slow it down, nothing to hit. So we just fell through it really fast. We call that an air pocket. If we break to the upside today, we could again go right through that zone and not hit anything. And we wouldn't start to hit anything until around 40.90, 40.80, 40.90, this volume right there, which is the point of control on the TPO. It's not the point of control on the volume profile, but still, we've spent the most amount of time in the last 10 days at 40.90. It's interesting to think of. Imagine how much liquidity is there. Apparently, not as much as we have way up here at 40.32, 41.32, it's a cog line. Now, at this point, we have more volume at 40.11 than we do at 40.90, where that TPO level is. When we're at the top of the box, we expect to go to the bottom. When we're at the bottom of the box, we expect to go to the top. We've got this right now, very odd shaped inverse head and shoulders. It's a very weird looking one. The more ugly and disjointed and confusing a pattern is, the more worthless it is. At least back here, this head and shoulders inverted had a bit more of a classic shape, and it measured out perfect, and we traded it perfect, or price moved through it to its measured move perfectly. This one, I don't know. Maybe close one eye and tilt your head sideways and squint with the other one. Kind of see it. It shouldn't be that bad, right? When they are that bad, they're basically worthless. All right, the algorithmic nature of this move is very clear, very clean, and you can see that it's done. Whatever it was intended to do, it did it. It's over with. But notice where the point of control is for today. It was up here, and TPO would say that's the point of control because we spent the most amount of time there. And even though we've only been down here for about an hour and a half, maybe 2 hours, there's been more volume right there than there was in all of this where we stayed through most of the night. We can see that because that's where the point of control is. If we were on a footprint chart or a TPO chart, we could see when this volume actually happened, because it could have happened in the first 2 or 3 minutes or 2 or 3 candles. We hit an iceberg. So that stopped price momentarily. I don't think it's done. Very likely it's not done. And then we've got econ at 8:30. So whether it's done or not, econ's coming. There's no VPOC to bring forward from yesterday. We've already punched through that area, so it wouldn't be a VPOC at this point. But we do have one at 38.91. It's a long ways down. And there's all these old levels down there. I don't expect that they're going to have a lot of validity, but they are down there. Notice where price stopped yesterday. It didn't hit it, but it came darn close. And if we were to turn on some of the major moving averages, I bet they would line up with that bottom. We also have a VP overhead at 4107. Got a voodoo line at 39.34. All right, we are completely and totally outside the box. Now, the day's not done, so the box for next week is not set yet. It's still moving, but it's giving us a little bit of a snapshot of what next week might look like. This box that I'm dragging around is the size of the week that we're in and that is about to end. And you can just take it and set it onto next week's and see what it looks like. Now, our current week was only a 4-day week, so it makes sense that next week is bigger on the simple fact that there's 5 days next week. That's a good start. There's more days, there's going to be more volatility. But it's not much more. It's not some big extreme thing. It's just a little bit more. It seems like it's right in line with just adding one more day, right? If we have movement measured through time and we now have more time, there's an expectation that we could have more movement. Makes perfect sense. So this isn't telling us that there's anything extreme next week. This is only showing us that we have an extra day next week. Or it's not really extra, is it? It's just a week. It is worth noting that after we make a rollover, we normally go back to the 0 line before either making another move or coming through. But there are times where we don't make the rollover and get back to 0, right? So we come up and we go back down, and we come up, and we go back down, and we just don't get to that 0 line. When we had the rollover here, it was looking like we were going to go to the 0 line, and instead we've started going back the other way. Now, the day isn't done, so the current histogram bar that we're looking at with a minus 1.54, it's not done yet. It could pull up, and we could close closer to 0 than we are at the moment. And that would make more sense, because that would be that rollover and then the transition back to 0 again. But for the moment, it's really looking like it's stalled, and we're going to drive away from the 10 today for the moment. We are really close to the 10-week moving average. We've interacted with it quite a few times recently. We don't stay that close to the 10 for a long period of time. Now, I don't have a number on, how much time we spend near the 10. But what I would suggest is look at this long graph here and kind of ask the question, how much time does it look like we spent near the 10 with these very small areas just hanging out there? It's kind of rare compared to everything else we have. So what's the takeaway? We're going to make a move soon. It's kind of the takeaway. Like the old song says, I don't care where you go, you just can't stay here. Well, one of the promises the market's making is not going to stay here. It's got to make a move. Now, I've heard more than once that 2023 is going to be the sideways year, that we're going to do a whole lot of sideways action. And so far, I mean, that's kind of proven true, at least so far. Just keep your eye on that 10. So somebody was asking yesterday, if we were to break the low and actually start going, what's next? So we'll just kind of back it up to what we had yesterday. There's nothing down there. 3,900. That's what's next. That would get us back to this area. Now, I'm not saying it's going to be a straight shot. And we broke outside of it yesterday and came back in again when they defended yesterday. Really nicely too, by the way, but kind of beside the point. So we can wick back down there again today and come right back up again. Excuse me just a second, guys. All right, sorry about that. So the idea would be that we can break down through that level again and come right back up again. Right? So that's what we really want to look at today. The bigger picture, if we are going to make a big move down or up, not just for the day, how far can we get today? We've gone through that already, but the next step beyond that, what would it lead us to? We've been looking at the current range here as like a stopping point, a midway. And from this location, we're either going to finish this base off and come back up across these highs, retest this upper zone, or we're going to finally break down from here and transition to the next level, which would be at the very least back to that 3,900. So, you got some pretty easy targets there. That's 4,200 to the upside, 3,900, and then 3,800 to the downside. All it has to do is definitively leave this base. Now, just like yesterday, that little fake out before it dumped on everybody's head. If we are going to break and move up, it's a 200-point move. 200 points. There's plenty of movement left up there. So you don't have to take the breakout as soon as it breaks out. You can, especially if you're going to day trade, no problem. But if you're trying to set up a swing to capture some of that 100 or 200 points, give it a little bit of time to prove that it's actually broken out so that you can trade with conviction, size up, and make some real money on that move. Or the same thing with the downside. It's going to be 39, and then if we break that, 38. Plenty of movement down there. All right, the China ADRs down 2.3. I'm looking for emerging markets. Where's that thing? Emerging markets is a long ways off. It's only down 1.5, which kind of implies whatever's knocking on K-Web isn't necessarily all of the China ADRs, but maybe one particular name in there. We'll have to go take a peek and see which one it is. Gold down 2 kind of implies US dollar Japan is up, which would imply that the Dixie is up. So we'll go in and take a look at those. All right, so Baba's down and Baidu's down pretty well. Either one of those could account for the K-Web constituents being off their game. Surprisingly, NVIDIA didn't just completely give it all back yet, but people's calling that one a really great short opportunity. I haven't had a chance to read or even listen to this transcript from the NVIDIA earnings, but I've heard it from enough people now that I want to. And I'm not the kind of person that goes in and spends a lot of times on the earnings announcements. But I've been told that it's insightful, not just for NVIDIA, but across the board. So, you got a little free time this weekend. I would recommend that you listen to it or read the earnings from NVIDIA. I know I will be. And it's not exactly what I want to do with my weekend, but so we're down in everything, but only mildly, right? That's what this is telling us. We're only down mildly, so we're not exactly seeing what I'm looking for there. All right, gold's getting up into that 105. A little bit of a runaway. It's starting to look a bit parabolic. So when price acts like that, got to kind of, they call it a poor risk reward, right? Like what's more likely that after making a big move like that, it's going to pause and then make another big move just like that again, or that it goes back in the other direction. And it's much more likely statistically to go back in the other direction. So that's a heck of a breakout and a really decent run. Very likely not done yet, but 105 is a really, really big level. It's got a lot of weight to it. I don't think Thinkorswim offers enough data for it, but this goes back all the way to 2000. If you want to see more than that, you might have to go to like stockcharts.com or something and see those historical levels that they have. We could overshoot a little bit into like 106, 107. On the weekly here, we got a really nice turnaround started, and we are on week 5. Something to kind of keep in mind when it's the 5-bar rule. Now, gold's kind of taken that beat down for a while. You got to be asking the question, at what point does this start to turn around? Keep your eye on US dollar Japan for that answer, because it'll run inverse of that. We are getting a Busby here, but I don't look at a move that big as a Busby. A Busby is supposed to be a much smaller thing, right? Where, price breaks a range, makes a mild move away from that range, comes back and retests before continuing on. That's a good size Busby. And I would argue almost that's too big. It certainly shouldn't go like that. That's way too far to be a Busby. That was a nice wedge breakout, though. A little sloppy, but whatever. All right, US dollar Japan making that move to the upside just like the dollar, and it's above that 135 point, which has been a line in the sand for a while now. This is a critical level. We'll keep your eye on this today and see if it's going to be defended at all. One way to see what's going on over there is to look at the 10-year, the Japanese 10-year, not our 10-year, right? So on TradingView, you can do that. It's JP10Y. Now, they were running their yield control curve at 0.25. They gave up on that around mid-December and relaxed their restrictions to 0.5. If this starts to get a little out of control, then they'll go in and, give it a little bump or a nudge in one direction or another. So you can see between the 21st, which was Friday, and then Wednesday, a significant change into Thursday, and then a real push, a real difference here. %28 of the S&P is down 0.5% this morning. Only 6% of the S&P is down 1% this morning. And it's chip names, not all the way across the board, but two of the leaders, AMD and Qualcomm. For the NASDAQ, 22% of the NASDAQ is down more than 1% this morning. That tells us a whole lot about what's going on this morning. So it's those tech names. Finance did some serious moves yesterday, which I had warned you guys, watch finance. So a lot of these are chip names. And then we've got those China constituents like JD, PDD. Those are really big names in that space. All right, Microsoft is slightly green, and that's it. Everything else, Meta, 1%, NVIDIA, near 1%, Apple, 1%, Tesla, more than 1%. So all these FANG names taking the smackdown. Now, it's not extreme yet, but considering everything else is kind of hovering or holding around of 0.5% or less, seeing those names down that much shows that a lot of what we're seeing is from those FANG names. Now, I don't know if it's a, growth to value rotation or anything like that. It's too early in the morning. But it does stand out of what direction, what's getting whacked, right? Netflix down 1.25. It really looks like they're front running a little bit on that data that's coming out this morning. We can see a little bit of a pause, and then we've broke down again in the ES. The NASDAQ didn't complete the breakdown and continue to move on. Only the ES did, which is odd considering how many names in the NASDAQ are down 1% versus the ES. And the Dow took a big punch on that one. So the NASDAQ actually fared better than the rest. Dixie still going. VIX still climbing. So this is kind of where you want to put your focus this morning. The econ that's going to come out is going to be the #1 driver first. But if there's going to be a shift in dynamics, kind of like yesterday where we had that really beautiful bottoming formation and turned around and ran back up in the other direction, it's going to come from tech or finance. Now, very likely we're not going to get that change, right? It's going to be up or it's going to be down, and that's what's going to stick. But we can't say that for certain. And that's what this warning is about. Watch for the reversal. Yesterday's reversal, there really wasn't anything on the charts that I could point to and say, this makes me believe we're going to turn and go up from here. Right? And the picture that I had shared was just a gentle move across the lows and a little bit of a turn. And we had just come back inside yesterday's range. So we're talking about Wednesday's price action on Thursday. That's all there was. There really wasn't anything else kind of giving that signal that we were going to rebound and come back up. But we had the moves in the TNX, the dollar, US dollar, Japan, TLT. So there was some ancillary data, right? Kind of giving us that turnaround. So I'd say things are pretty clear this morning. We need out of this box. Otherwise, it's going to be a really choppy Friday. Very likely not going to be the good, clean, sweeping moves that we had yesterday, but more of the choppy, grindy, kind of nasty moves that we had Wednesday. Looking at Thursday, you can see even when we're range bound, there's the potential for good price, but it's not normally that way. Normally, if we're sitting inside the previous day's price action, it's going to look more like this day, Wednesday. It's tradable, but it's difficult trading. Smaller position size, getting out, at closer targets, being less forgiving with your stops. It's just much more tricky to trade. So one thing you could do is just set your alerts, wait for price to get to the edge, and then trade the reversal or trade the breakout. And otherwise, just enjoy your Friday and not stress on it. Keep your eye on the clock today. And the afternoon looks really good for a 0 day, right? We really don't have anything this afternoon other than maybe some Fed speakers. And I don't think they're going to come out and really do anything that they have. There's nothing left to really say, right? Everybody on in the committee wants to go with a 50 basis point rate hike, and they're all thoroughly convinced that there's still a whole lot more work to do and that they're not done doing it, and that they're going to have to adjust their mythical target rate because their goal is to get mildly restrictive. And so far from the data, they're not restricting enough. So that's what I got for you guys. Be careful. Be safe. Have a good weekend. I'll see you all next week.